Here's why one of the absolute best income sources pre-retirement is actually your invested brokerage assets. And here's why. There can be a lot of sources of income that you can generate for yourself, especially when changing jobs or starting a business, and they come with different pros and cons. A lot of the ways that people generate income is things like rental properties or high-yield savings accounts, and the big disadvantage of those is that you pay ordinary income tax on all of that income. A lot of people don't realize that there's an entirely different income tax system in the United States, and those are long-term capital gains taxes. They're not the same rates as marginal income taxes. There's only 3 rates that you could ever pay in long-term capital gains taxes: 0%, 15%, and 20%. And for a married couple, you're paying 0% on income all the way up to $96,000, and that's indexed to go up even more next year. So during periods of transition where your income is lower, you can generate significant amount of income from your brokerage account, either from dividends from qualified U.S. corporations or from liquidating some of your stock holdings and taking those capital gains on the appreciation of that stock value, and pay nothing in taxes. A lot of people avoid building significant amounts of wealth in brokerage accounts. They want to be in things like 401k plans or Roth IRAs that have various tax advantages to them. But they don't realize that one of the big tax advantages of income in general is the nature of the income. So it doesn't even matter that your account isn't in something like a Roth IRA where the taxes are deferred, or in retirement, they're completely tax-free, because you're paying a completely different tax system on that income. Remember, you're only paying that tax on the capital gain. That's what you sell it for minus what you paid for it. So you can often generate cash flow for yourself well over $100,000 as long as your capital gain is under $96,000 and you pay 0 in taxes. When you take the tax-weighted actual return of multiple investment strategies, oftentimes brokerage assets come out ahead because not only can they appreciate in value, but the gains off of that appreciation are often tax-free, or at the very least at lower rates of 15 or 20%. Comment below whether you build most of your wealth in brokerage accounts or retirement accounts, and follow for more financial advice.